the outlook for EBIT of $10 to $12 billion, even at the low end of that range, it's above what the street expected, and it was exactly what the street cheered when General Motors gave that outlook last year. When you read the earnings release, they're just reiterating the same story, that there is a slowdown in growth of EV sales, and they have already acted on that. Something that you haven't covered, I see lower down the release from COO Galhotra, is they've been able to identify $2 billion of cost savings relating to materials, freight, and manufacturing. And that's interesting in the context of Ford's global footprint, because you guys nailed the story. They are cutting back on the output of EV supply because the demand's not there, but they're also having success with their legacy business. And if you look, for example, on the narrative of their profitability outside of North America, they're getting traction with that Ranger pickup in Europe, and they have a lower capital base in China that's working out for them. So it's good stuff.
So if you had to kind of drill down on what investors are more excited about, you see about 7% of a rise after market in Ford stock right now. Is it more excitement around this, a cut of $2 billion in additional cost reductions, or is it this supplemental dividend, or investors just excited to get some money back?
It's probably both. It shows good cost discipline in a tough environment. I would also look at the CapEx forecast, which I think was slightly higher or above what was estimated, and that gives a bit of confidence that 24 might be a bit better. They can be a bit more bullish and proactive. I'm just going to read this to you guys because I want to get this right. There is both a regular divvy and a supplemental divvy. Regular dividend of 15 cents, supplemental dividend of 18 cents per share, both payable March 1st to shareholders of record on February 16th. But yeah, a nice little sweetener for investors, old and new.
Interesting that it would be a supplemental dividend. Right now, you can see the stock being celebrating the extra payout, but that supplemental dividend, I'm curious why they didn't go forward with something, just a bigger increase overall. Can you tell us a little bit more about the plan to continue to dial up output of the traditional internal combustion engine models? Because that's the moneymaker for Ford right now.
Yeah, it's the moneymaker from Ford, and it's where they took action. So not only did they say we're going to cut 50% of our planned output of the F-150 Lightning, for example, but we're going to take some of that workforce and put it to the assembly lines that are working on the likes of the Bronco, the likes of the Ford Ranger, and the higher price point pickup and SUV. And what was interesting as well, you know, we're really focused on the outlook, but at the quarter just gone, they had EBIT of $10.4 billion to end the full year. That was at the higher end of their previously guided range, but it also takes into account the cost of the UAW contract, which Ford had said was $900 of additional cost per vehicle built, but it showed that they were able to manage using the cash cow that is the legacy combustion engine business, the bottom line, and give us this positive outlook for this year. I also would say, if you have some time, read what they said about software and subscriptions in the release, because there's some pretty big numbers there, and it's a nascent business for them. But think about the parallel with Tesla and how much credence investors put onto software sales for Tesla going forward.